Hi everybody, in this video I'm going to go over Broadcom, ticker symbol AVGO's third quarter earnings, how it was actually a pretty good earnings season, and stock has been very volatile last week, up, down, back up again. So let's look at the actual numbers. Hi, welcome to the channel, everybody. I'm the investing teacher, not only teaching investing, but a high school science teacher. Just wanted to go over Broadcom's third quarter earnings report. Broadcom shares rise as earnings outlook topped the street view. Wall Street thought that they were going to make a certain amount, actually topped those numbers. So they rose in the extended session Thursday, doing this video Friday morning, and Friday we are up 3.9% because of the earnings. Net quarter income of $614 million or $145 a share. It is lower than last year, but it was higher than expected. Adjusted earnings were $5.40 a share compared to $5.16 a year ago. Revenue rose to $5.82 billion from $550.52 billion a year ago. The expected earnings of $5.24 a share. So they delivered results in line with their expectations, driven by healthy demand from cloud and telecom customers. So they're going to be pivoting towards 5G, a lot of 5G phones. Apple's going to be coming up with one, and Broadcom is one of the main chip manufacturers for the RF radio frequencies for 5G. So they do have a contract with that, and it's about 10% of their actual sales. Here's from the investor's website. GAAP income $618 million, diluted EPS of $1.45. They got $3,073 million of free cash flow from operations. So they have plenty of money to cover their dividends, and their dividends have been growing pretty heavily. They actually did declare they're going to maintain the same dividend this quarter, but it's pretty likely that they're going to be raising the dividend in the last quarter of the year. Here's the actual PDF of this. Net revenues up from May. Cost of revenue actually down slightly. Gross margins up from 31.89 to 33.16. And if you compare it to a year ago, quite a bit lowered. Total operating expenses, however, are lowered as well. $7,281 million last year, now it's $2,308 this year. Interest expenses, they do have quite a bit of debt, so one of the things they might end up doing is paying down some of the debt possibly, although it's at a very low interest rate. Net income to common stock, we're at $614, increase from $488. Now you'll notice that Broadcom stock has been fluctuating quite a bit with Apple stock in the last few weeks. Look at Broadcom stock in the last 6 months. Did have a dip in end of March, but has increased 28.38% in the last 6 months. So it went back to its original levels and then some. If you look at the 1 month, they are up quite a bit, I think over 10%. Let's compare Apple's stock. Apple in the last 6 months actually increased even more at 67.12%. But since Broadcom is the main chip manufacturer of the RF chips that makes your wireless and 5G eventually coming out in Apple phones, it will help both companies, especially if a lot of people are buying the iPhone still. Broadcom in the last month was 9.61%. Big jump. It hit the peak of 376. It dipped a bit, just like the whole stock market on Thursday, and now it went up again 4% currently. I'm doing this video at 8:46, so who knows what's going to happen by the end of Friday on 9:04. But pretty much near the peak again. What I really like about Broadcom stock is it's a tough company with pretty high dividends. The yield is 3.69%. When I initially opened this position, it was over 4%. And the dividend growth, 9 years of growth, the 5-year growth rate is 55%. I don't think it's possible they're going to continue that into the future, but if they could keep the dividends at least 10 or 15% growth rate with this dividend yield, even though the stock might be possibly overvalued right now, I think it could be a good position if you're interested. So let me know if you have any questions. Again, I'm the investing teacher, and if you have a great